So wanted to go over this trade I did this morning really quick. Made a quick profit, but sold early. Basically what happened is the market opened. You can see for this strategy, I get in when the hole is green. This is an indicator called the hole suite by InSilico. And as you can see, it's green right now, but going down. So we're on SQQQ right now, and I switched over to TQQQ because it's now trading above the 200-day EMA, which I never trade anything below this line right here. I kind of treat it as like, this is like the surface of the ocean, and then anything below you're drowning, so you have to get out as fast as possible. So over here, this gray area here, this is another indicator I'm using called consolidation zones. I don't trade anything in these consolidation zones. So the green candle closed, but then it's in the consolidation zone, so I kind of was waiting to see what happens. Let's fast forward. Okay, you can see it broke out of the gray consolidation zone. That kind of disappeared. So over here, I was looking to get in. And what I do is I get in and I set the stop loss right under the EMA right here. But I usually sell when the hole turns red again. So you can see the hole is green over here. So I set an alert for the hole to turn red. And also I set an alert right here on the SMA. That's another situation where I just sell everything. So I got in right here, and I had this, basically what I do in situations where the EMA is flat like this, is I like to sell early right up here at where the resistance is also, half of my position, and then I reset my stop loss to where I bought it at. So then fast forward, let's see what happens. So it hit that. So over here I sold half, and I reset my stop loss to where I bought it at. And then what I do next is I sell another half once I'm up around 1%, and near wherever the resistance is, around 1%. So in this particular situation, I messed up and I sold early. I sold right here when I saw it starting to struggle again. So the entire trade was like a tiny profit of like 0.5%, but it's kind of a lot if you're doing large positions. And then, as you can see, it kept going up and past this major resistance over, not past it, but like creeping up, almost past it. And that's when I stopped recording. Let's see what's happening right now. Okay, so as you can see, it went up. This is where I bought it at. So I missed out on 1.89%, and I got 0.5%. But as you can see, so we're on the 5-minute candles, by the way. The strategy only works for the 5-minute candles because the hole doesn't give a lot of false signals. And as you can see, you don't want to be caught in this, and that's kind of why I'm so careful and I sell early sometimes. But in this particular situation, I feel like I definitely, once you got the stop loss set to where you bought it at, right here, then it's like you just got to let the trade play out, because if that hits, it's not a big deal. And so as you can see now, the hole is still like super green. So once that hole turns red, I got my alert set. This is how you set your alert on the hole. You just click these 3 little dots here. You do add alert on hole, and then when hole's trending down, it's going to alert me. And then when it's trending back up, I'll set another alert, and that's when I would potentially get in again. So this strategy is called, I'll go over it a little bit of what I do here. It's called the Green Days Hole Strategy. And so I only trade TQQQ and SQQQ on TradingView with the 5-minute time frame. These are leveraged ETFs. So definitely do your research on these, because basically you don't want to hold these long term because of this thing called decay. So you don't want to hold it for more than a couple months or even 1 month sometimes. So it's really just meant for day trading and short-term swing trading. And the indicators I used, the 200 EMA and the whole suite with these inputs. So if you go under indicators, EMA is the first one, the moving average exponential, and you set that to 200, and the whole suite is by InSilico. I changed the length to 39. I think the default is like 55 or something. But for the 5-minute time frame for day trading, 39 I found is what works the best and doesn't give out false signals. Because what the whole, like, look at this in the 1-minute time frame. So as you can see, there's a lot. I'll show you on like the previous day. So on the 1-minute time frame, you can see it goes like back and forth like quite a bit. And these are all like false signals because it's trading horizontal. So whole's green right here, you buy in right here, and then whole turns right here. So that's a loss, right? When you switch to the 5-minute, everything smooths out and there's not like this back and forth action. So this entire trade is a great short trade. So over here, it's on the EMA. It broke below it, so now it's great for a short trade. The whole is red, so you would get in. Not sure why I got in up here, but you would get in right here, and that would give you a nice 2.6%. So that's the whole suite. And then I use like a bunch of other indicators to kind of confirm before I get into a position. But let's skip this for now. This is when I'm trading like large positions and I want to be extra careful, then I will follow these. So you buy when the whole turns green and a green 5-minute candle closes above it. Alright, so whole turn green, green 5-minute candle closes above it. This would be an entry point. Can enter if the green candle is a couple candles later. So if it's, let's say this was a red candle, closed as a red candle, this closed as a red candle, but then a green candle, like, then I would just get in once the green candle closes. Hull is very slanted, not horizontal. So over here you can see this horizontal hull line. I'm so sick of saying hull. So over here you just avoid taking any positions because this is going to give you false signals. There's no price movement, and you take tiny losses when that happens. And then it's above the 200 EMA. So I sometimes I buy on the break of a 200 EMA. If the hull is like kind of been green for not that long and then it breaks, I would get in. But if the hull kind of like goes for a long time and then it breaks right here, I wouldn't get in right here. And as you can see, that would have been a bad idea. And for selling, I sell all immediately when the hull turns red, and I sell when it dips below the 200 EMA. For winning, I sell half at any resistance around like 1%, and then I set my stop loss to where I bought it at, and I sell another half at any resistance around 2.5 or 3%, and then sell all when the hull turns red. So that's pretty much it for now. Gives you an idea, and I'm just going to be going over like every trade I make and posting it. Thank you. Thanks for watching.